I guess what are some of your takeaway from the election? Any broad stroke thoughts from a business vantage point?
I think just overall, it's just so amazing in a couple months how much change can happen. Like really, let's be frank. The Liberals were losing here at the beginning of the year.
They sure were.
Between what's happened in January, what happened in the U.S., really the tide shift very, very quickly.
Yeah, well, the best thing they did. I mean, this isn't a political show, but politics intertwined with finance, with life,
mortgage
and finance,
yeah,
and it's topical. And the best thing that they did was Mark Carney, in my opinion. I just think that was the right choice, hands down, in my opinion.
I agree. He has so much experience. It's really a no-brainer. And I think the one thing that really kind of resonated with Canadians, they didn't want another Trump.
Yeah, or another Trudeau.
Yeah, or they wanted a change, and I think
right.
he was that right change. And you and I are very familiar with Mark Carney, with all the stuff that we've done with the Bank of Canada. And, people are concerned about finances. They're concerned about relations with the U.S. They're concerned about what the Bank of Canada is going to do. And I think Mark Carney was that calming force that, the majority of Canadians wanted and needed.
Yeah, and having somebody with his, the exact opposite of Justin Trudeau in every way. Not to besmirch Justin Trudeau, but why not? It's in vogue these days. But with his monetary policy knowledge, that's got to be a huge advantage, I would think, for the Prime Minister.
I agree.
Yeah.
And, it's going to be very interesting times, going into obviously forming government, cabinet, getting things really rolling, the business of the day of government. The thing is, when, that incumbent government forms a government again, things still, I think, continue maybe a little bit quicker than if it was a brand new government trying to form again.
Yeah.
Of course, there's going to be lots of staffer changes in Ottawa, different ministers, different MPs that need to staff up. But, the business of the day, I think, is going to continue. And I know Mark Carney met with Trump this week.
Yep,
that was certainly very interesting.
It was highly anticipated, and I thought that Mark Carney did a great job, as good a job as could be expected.
Canada's not for sale.
I don't know what else people were expecting. You had some people thought he should have gone elbows up and all aggressive, and that would have deteriorated so quickly.
That doesn't work. With Trump, and I think this is a real estate show. This is a mortgage finance show. And I think it really hit home to me when Mark Carney said, Canada's not for sale. Yeah. Not all real estate is for sale. That's reality.
Yeah, that was a great line. I'm going to bet that was rehearsed and that was that he didn't think that off the cuff.
But you know what? That was good media training then.
That said, he delivered it like it was off the cuff.
Mm-hmm. Yeah, it did. And it's really interesting now, obviously, with Mark Carney becoming Prime Minister or continuing along as Prime Minister. It'll be interesting to see what they do with 24 Sussex. So I've seen a lot of things in the news. It's not been used since pre-Trudeau.
Yeah.
So and I guess it's going to take about $36 million just to make it livable, and about $100 million to bring it up to really today's standards.
Tear it down. Be done with it.
And start fresh.
Yeah, start fresh. I get the historic nature or value and the intrinsic value of the historic nature of it, but I just think that.
And I think it's 150 years old.
Yeah, it's ancient. It's. I would say start over. Why not, right? Yeah. So overall, from a Bank of Canada perspective, I'm sure that Mark Carney would he knows that job intimately, right? Mm-hmm. I'm sure that. Do you think
he's done it in Canada and the UK?
Do you think he might be second guessing in some way Tiff Macklem? And I know there's got to be a complete disconnection there between the Prime Minister and the executive branch and the monetary branch. But I would think that he would, in his mind, be kind of armchair quarterbacking what Tiff Macklem's doing at the Bank of Canada.
I will just go on a limb. I wouldn't be surprised if Macklem exits. I can see that potentially happening. I think that he was unpopular saying that the rates are going to stay low for a long, long time. That was not true.
Yeah.
And I think you and I and a lot of Canadians thought, well, we can't keep the rates low forever, especially if inflation is increasing. Mm-hmm. And he really set some Canadians down the wrong path. Yeah, we have to take what the governor of the Bank of Canada is saying as face value. Mm-hmm. But he's navigated some pretty rough waters here, with inflation and with the high rates. And I think things are certainly moving in the right direction. I think the real question is going to be, what's going to happen the next several months into the next several years, especially with what's going on in the U.S.
Yeah.
I think the Bank of Canada is going to continue to lower that key overnight rate. Mm-hmm. A lot of economists think we're going to see 50 basis points less by the end of the year.
Yeah.
But the interesting thing, fixed rates have increased. Mm-hmm. Fixed rates were really edging down to that 3.99, 3.94, 3.89. But a lot of lenders have increased fixed rates over the last few days and weeks. primarily because institutional investors like banks have gone and start buying bonds. They've gotten away from the stock market. You and I, retail, individual investors, we're going and we're buying things in the stock market because things are on sale.
Yeah.
But the big institutional investors have not been doing that. And that's driven up the cost of fixed rates.
Is that a good thing for when all is said and done? Because the bond market is a real reflection of the underpinning of the economy, is it not?
Well, I think it certainly is that. And I think it's going to be interesting with what's going on with inflation. So it's hard to lower interest rates and stay inflation because obviously we want to not have a recession, but we also don't want to have high rates. So it's a very hard balance. And I think that is a very tough job from the Bank of Canada to be able to navigate that. And we really came out from, very high inflation numbers and high rates. And now we're getting into a more stable environment. And I think the rates that we're seeing today, I think we're going to see them lower. But any rate from, mid threes to mid fours is still a good rate. I've been doing this for 20 years. I've seen rates in the sixes. I've seen rates in the twos, maybe edging down in the ones. But we're in the middle mark, basically, of where the interest rate range has been the last 20 plus years. And people are like, oh, the rates are so high. Well, they could certainly be higher. Yeah. Yes, they could be lower as well, but we're basically in that median mark in rates, which means that I think we're in a more stable and balanced rate environment right now.
How concerned are you when it comes to tariffs and what impact that might have on new home builds?
I think tariffs are a concern.
Yeah, with all the construction materials coming from south of the border.
But, a lot of the materials that we're using to build homes here, a lot of the materials are Canadian. When we think about lumber, when we're thinking about gypsum, a lot of these things are Canadian made. I think the challenge is with tariffs, we need to work on different supply chain challenges. You know what I mean? Like maybe we need to buy more things from Europe, from Asia. We don't always have to buy with the U.S. U.S. was our closest trading partner and one of our best friends to Canada. But that relationship has changed. Before the show, we were talking about even like border crossings and, how they're at like record low numbers, people crossing the borders at land borders and, flights to the U.S. being half full. I think we're going to continue to see that for the next like 3+ years. It'll be interesting to see what happens after the midterms in the U.S.
I would think, though, that if softwood lumber and whatever exports that are going to the United States, if that business is drying up, that could create upward pressure on prices here as well from Canadian companies because they're going to need to make up that
demand is not as high.
That's right. They're going to have to make up that revenue somehow, right?
Yeah, it's a really hard balance. And you hear about big employers, like even the auto manufacturing sector, laying off or temporarily laying off hundreds and hundreds of employees. That's a direct result in that supply and demand issue. Right now, there's more labor than there is demand for that labor. And that's really challenging. And we never want to be in an environment where, hey, we're going into recession and we're seeing mass unemployment. We don't want that in Canada. So as much as, yes, we want rates to be low, it's a hard balance to achieve. And I think it's really tough. I think we're in a more balanced environment today, but it is challenging. And the U.S. is a big factor into our economy.
And consumer confidence, of course, is got such a connection with the housing market. It's massive.
Certainly. And, we have, I think, a high confidence here in Halifax because the demand is high, supply is low. In other areas of the country, it's not that way. Like if you look at Ontario and you look at BC, like they're still struggling. They're struggling with a lot of inventory. They're struggling with the prices softening because there is not as much demand. But we haven't seen that here. And that's why a lot of borrowers, they ask me, they're like, okay, well, when are we going to start seeing real estate prices go down? I don't think it's going to be the case here. We just haven't been able to keep up with the amount of demand.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.